Welcome back, friends. I have come again for our weekly stocks and market review. Today we are going to discuss Nifty, Bank Nifty, both the indices, as well as I would offer you two stocks for this week. This week doesn't mean that it is actually for the week the stock recommendation. The recommendations are for the intermediate and the medium term. But keep watching, you will get to know that there are still good stocks even after the market fall. This week the Nifty performed pretty well for the first four sessions up to Thursday, but come Friday after the weekly option expiry, Friday the first 1.5 hour had been pretty good, but after that the market started coming down. The Nifty actually fell quite a bit and is testing a particular support level, that is the 18,000 mark. Nifty has closed at 18,069. To remain bullish on Monday, it needs to stay above 18,100 mark, and better still that it should not test its 9-day moving average, which is exactly at 18,002 after the Friday's closing. This is the very critical moving average for not just the Nifty chart, but for any chart. If the 9-day exponential moving average is held and not broken on the downside, then the bullishness continues. So that is still there, that Nifty has not yet broken. So we need to watch initially for the level of 18,100 or 18,090, 18,090 to 18,100. If taken out and the Nifty sustains above that on Monday, that would be very good for the bulls. Suppose if it were to go below 18,000 mark, where the 9-day exponential moving average is located, then there are chances that it might actually test something like 17,800, where the 20-day moving average is located. If by any chance during the week, if the 20-day moving average level of around 17,800, if that gets taken out, then there could be a major problem. There could be a major problem, because that means the recent uptrend that we have seen for so many days from the lows of 16,800 is getting terminated. But as of now, it is just bulls have taken it to their chin. It's not that problematic. But suppose if we were to go below 18,000 first and then 17,800, if 17,800 is also taken out, then we have to say that the intermediate uptrend is terminated. And so long as it stays above 18,100, this is Friday's thing, is just a one-day sell-off. Actually, the damage was done because of the Bank Nifty. The Bank Nifty, after the first 1.5 hour, it simply could not sustain itself. The major debacle that happened right in the morning was because of HDFC Bank and HDFC. MSCI, that is Morgan Stanley Capital International, has downgraded them, and it is a sharp cut. So that's why both the HDFC twins, that is HDFC Bank and HDFC, both have come down substantially in Friday's session. Because it has fallen so much, the Bank Nifty was already on the back foot right at the beginning. After that, there had been selling in other bank stocks too, and finally what we saw was a huge fall in the Bank Nifty by 1,024 points on Wednesday. Bank Nifty was very close to make a fresh summit assault at above 44,151. The Thursday's close was less than 500 points from the top, but the way the Bank Nifty fell on Friday, this shows that bank bulls have to rework. And during the process, what happened was the 9-day exponential moving average, which is currently at 42,947, that has been broken decisively because the bank nifty has closed 300 points lower. Now what we need to see is the 20-day moving average, which is around it is currently around, say, 42,319. If 42,300 gets taken out, then there is a serious problem even for the bank stocks. As you all would recall that the bank stocks had been the mainstay of the last, the ongoing intermediate uptrend. Banks led the rally. Now is the first time that the bears have actually got some foothold. They have not just got a toehold, they have already got a foothold. Now we need to see how things pan out on Monday. But as of now, suffice it to say that the weekly chart is slightly weakened. Probably it may take some time before we see the bank nifty taking out its 44,151, the earlier all-time high. We were at least I was thinking that it might just happen either today or on Monday. That seems to be put off for the time being. Bank nifty needs to recoup itself. Bank bulls would have to do a lot of hard work to take care of this kind of skirmish that has happened for the bank nifty. Well, now is the time for our stocks. For this week we have chosen 2 stocks. Again, they are from the finance and financial services, insurance kind of stocks. Don't you worry, the stocks that I am recommending today, their charts are pretty good, and they are suggesting that over the medium term, remember this, that this is the recommendations that I am going to give you are medium term recommendations. By medium term, for in trading parlance, I mean 3 months to about 6 months time horizon. But this is a very regular pattern in Bajaj Finance. Yes, Bajaj Finance is the stock I am recommending. I am asking you to put a stop loss below 5980, and on the upside, your targets would be 69.90 and 74.80. That is the kind of price levels I am expecting Bajaj Finance to scale up to in say 3 to 6 months time. The salient features of this is that despite today's fall, Bajaj Finance is still above its 200-day moving average, although there is a spinning top that might actually see the Bajaj Finance coming down if on Monday the market remains weak. But if that were to happen, I must tell you that take those dips as buying opportunities, for the simple reason that you would be getting it at a lower price. And my confidence in recommending Bajaj Finance is that the 20-day and 50-day moving averages are giving a bullish crossover, that is a golden cross. So Bajaj Finance, I am pretty much hopeful that it would move up to say 7,400 kind of levels over the next 6 months. So buy Bajaj Finance. Again I repeat, buy Bajaj Finance. Your stop loss would be 5980, and your 2 targets are 6990 and 7479. Now we come to our second stock. Many of you who have seen me on television talking about this stock and any kind of queries on CNBC, Your Stocks and other kind of programs there, I have always been negative on the stock. That is, I am talking about LIC. LICI is the code. Life Insurance Corporation of India. Life Insurance Corporation of India, the chart is actually showing something really good, that it has formed a base after posting a low at 530. It has formed a base and now it is trying to move up. Currently it is around 560 rupees, and LIC is showing positive divergence on MACD as well as 14 RSI, and there has been a base building. Weekly chart is showing a much better scenario. Daily chart is giving some kind of a qualified buy because it has not yet crossed the major levels, but there are possibilities that LIC might actually move up. Put a stop loss below 549 on closing price basis for LIC. I know many of you are actually thinking when to average this stock in order to get a better average so that you can make some money, because if you have bought at the IPO level, then that was pretty high. So this is the time to average. 566, 577 and 589, these are the targets. LIC, I'm talking about the intermediate term, that is say about 6 weeks to about 3 months time. I'm expecting LIC to move up to 589. The three intermediate target levels are 566, 577 and 589. Where did you put your stop loss? 549 on closing price basis. If it were to come down to 549 and close there, then you exit the fresh position that you are taking. But there is technical reason to be bullish on LIC now. It is the time. If you want to go for averaging your position in LIC, this is the time. Thank you very much for being with me. We have come to the end of our weekly market review and stock recommendations. Remember this, that these stock recommendations are being aired for the coming week, but the time horizon for the trades are not 1 week. They are for 3 months to about 6 months. If you have liked my video, then please press the like button, subscribe to my channel, and don't forget to share it. Also, please don't forget to press the bell button as well.